Hey everyone, welcome to another episode of Bald Guy Money. And in this episode, I am going to explain what I think are the two most probable economic scenarios for 2023 and why I think it is inevitable that the Fed is going to trigger the price of gold and the price of silver to move up in 2023. Let's start, and I want to wish a Merry Christmas to everybody celebrating, so I'm going to make this a quick one so you can get back to celebrating and I can get back to celebrating. But I got this question from a viewer named Robert in my last video, and he asked, if the Fed is forced to continue raising rates longer, will that not strengthen the dollar like what's happening now? And that question really motivated me to make this video right before Christmas because that is the common wisdom and where a lot of people can get fooled right now because there are some different things going on in the background that you need to be aware of. Because in 2023, I see scenario one playing out like this, and I call this scenario inflation is tamed. The Fed will look at the fake CPI numbers and they will say, okay, inflation is under control. In turn, they'll stop raising rates, they'll slow down on tightening the money supply, and the economy and inflation will speed up. Now, in this scenario, I obviously expect both metals to do well, but I expect silver to do best. Because if economic activity starts to pick up in the West, and at the same time, China starts hitting their stride with getting their economy open, demand for silver should increase significantly, and it should put extra strain on the supply, which could explain why there are rumors about Elon Musk buying a silver mine going around. And this is something that I've actually been talking about since 2021. Now, in scenario two, which I call fight, 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 the Fed will see what I am already expecting: a higher than projected inflation number around March 2023. And we talked about that in the last video. And this will cause them to continue raising rates. It will cause them to continue to tighten the money supply, and it will trigger a massive slowdown in the economy while inflation persists. And this will result in a larger sell-off on the stock market and a move to safe havens like gold. And it will also give us basically a situation that looks very much like the late 70s and early 80s stagflation days all over again. And for those of you who lived through those days, you'll remember just how metals did during that time, because silver and gold experienced big blow-off tops once Volcker took over at the Federal Reserve and started hiking rates till they were sky high, which ultimately had long-lasting impact on the price of gold, which more than doubled from its 1974 level of $170 per ounce and settled into a new trading corridor between the $300 and $400 per ounce level when all was said and done. And even though silver settled back to its 1974 levels once the dust settled in the 1980s, I want to say that it's different this time. And let this serve as a response to Todd White or anyone else who has rightfully pointed out the fact that many YouTubers out there have been talking about this for the last 12 years. Because we have not lived in a world with such a rapidly expanding money supply and governments unwilling to even pretend they are being fiscally responsible, which is actually making investors question whether or not bonds are safe anymore. We have never had to negotiate CBDCs, and we haven't yet suffered the real consequences of shutting down the world economy for more than a year. And I want to tell you all, it's time to pay the piper. And in a world where the price of silver doubled almost overnight to fulfill our consumer electronic needs, and gold has been a reliable hedge against inflation, I don't think I have to explain more to most of you about why it's actually different this time around. Merry Christmas once again to all of those who are celebrating. Please like and subscribe if you enjoyed the video. And until next time, take care.